Edexcel Economics Paper 2, the Macroeconomics paper 2017. Let's get right into it and get started with section A. So let's have a shot at number 1. So look at this question like I always do, go straight to the question itself and then read the stem later on. So which are the following types of unemployment? So we're talking about types of unemployment. Would be good if my pen worked. So what are the following types of unemployment that best explains the change in the data between 2008 and 2010? Now straight away, some economics knowledge you should know, which is of course in the spec, is what is the significance of 2008 straight away. 2008 is of course when the big financial crisis occurred. So straight away, if looking at these options, so we have cyclical, frictional, seasonal, voluntary, this is really hinting to be cyclical. Why? Financial crisis, of course, there was lots of unemployment, lots of people being laid off as like GDP decreased massively. But let's get back onto the question. So if I was in an exam, I'd probably quickly scan through the options and be able to get this one marker done within like 20 seconds of reading it basically. But for explanation's sake, I will go through it. So what type of unemployment occurred between 2008 and 2010? So what does this chart show us? This chart shows us the unemployment, the UK unemployment rate. Okay, so if the unemployment rate between 2008 and 2010 increased, so that's what's happened. So what's happened to unemployment? Unemployment has increased, and let's see the option which best explains the change between 2008 and 2010. And for all multiple choice questions, especially the trickier ones, I would always use process of elimination. So we'll skip cyclical for now since we've already discussed that. And what is frictional? Frictional unemployment is temporary unemployment. So when you're moving between jobs and maybe that 10-day period, that 5-day period where you don't have a job because you're moving between the jobs, that is frictional unemployment. So temporary unemployment. Does anything in this data hint towards temporary unemployment? No, so I'm going to rule that one out. Secondly, seasonal unemployment. And when I was reading this part of the question, this is where we can rule out seasonal unemployment, because let's read this. The chart below shows the UK unemployment rate seasonally adjusted. Therefore, if it's seasonally adjusted, it cannot, this graph at least, cannot show seasonal unemployment. And last option, we have voluntary unemployment. The graph, yet again, has nothing, no hint towards voluntary unemployment. Doesn't show anything to do with voluntary unemployment. So I'm going to rule that out. So the answer would be cyclical. And why specifically is it cyclical unemployment? And a great diagram just to explain this, is a really good diagram to draw out as well, is the business cycle diagram. Of course, the real GDP on this axis and time on this axis. So what does this show? So the business cycle diagram shows booms and then it shows recessions in red. And how does that link to cyclical unemployment? So basically our economy goes through cycles. So sometimes we're in a boom phase, sometimes we're in a recession. If you think about a boom phase, one of the main characteristics is high real GDP. High real GDP, firms have lots of money, high spending, high animal spirits, basically leads to high employment. But then on the opposite side of the spectrum, when we're in a recession, there's low GDP, low consumer spending, and therefore leading to higher levels of unemployment. So that is basically what cyclical unemployment is. So some stages of the business cycle will have high employment, and some stages of the business cycle, like a recession, will have low employment. And that is of course demonstrated by here. Between 2008 and 2010, the levels of unemployment went up. And why was that? Financial crisis hit, firms didn't have enough money, there were no sales for firms because consumer spending dropped since lots of consumers lost money, and when lots of consumers lost money, it meant firms were making no sales, therefore no revenue, therefore no profits, meaning that they had to lay off workers, leading to higher rates of unemployment. So simply, the answer would here be cyclical unemployment. Moving on to the next question. So it's an explained question firstly, what I see, and it's 4 marks. So 4 marks explain, you're going to have a bit of chain of analysis here, it looks like. But so explain the likely effects, as an effect question, on the circular flow of income. So that reminds me of the circular flow of income. We don't really class it as a diagram, but it kind of is a diagram, and I probably will draw it here since it's explicitly mentioned it. But explain the likely effects on the circular flow of income of the change in unemployment between 2013 and 2015. So we're going to have to use this graph again, and now we're using between 2013 and 2015. So firstly, looking at the chart, so it shows unemployment rate. What is happening to unemployment rate between 2013 and 2015? Unemployment rate is decreasing. And since this question mentions the circular flow of income, I'm going to draw out the circular flow of income diagram. It's not necessary, you can pick up the marks just explaining the entire thing, but I think it's faster and easier just to draw out the diagram, and it's a bit of revision for content knowledge as well. So we have households, of course, and we have firms. So how do these households and firms interact? Firstly, and the first one I would write, is what do households provide firms with? Households provide firms with factors of production. What are the 4 factors of production? Land, labour, capital and enterprise. How do households provide firms with capital? For example, with the factors of production. For example, labour. We humans, we workers, are factors of production, and firms use us, they hire us, they pay us an hourly wage, and that is how households provide firms with factors of production. And even land, like for example, firms have to rent out land, and who owns those? Usually households. So that's one side of the spectrum. Now, what do households get in return back from firms for those factors of production? They receive factor incomes, factor wages, whatever you want to call them. So they basically receive incomes for those factors of production. So when you go to work for 8 hours, you will receive an income for working for that firm for 8 hours. Okay, now households have these factor incomes. What are they going to do with these factor incomes? So the households are going to use these factor incomes to spend on goods and services. So spending, and it's on goods / services. And then if we're spending on goods and services, what are the firms going to give us in return? The firms are going to give us the goods and services in return. Now, this is 90% of the circular flow, but there's a bit left where you'll pick up a few marks for this as well, which is the leakages / withdrawals, and then the injections. So just knowing these, again, this is just simple content knowledge. Just make sure you're testing your recall, doing your flashcards, and you should memorize all this. But yeah, what are the leakages? I used to remember it by SIT. So savings, imports and taxes. And why do we call them leakages? Since money leaks out of our circular flow. For example, in imports, money's leaking out of our circular flow. If you import like a Gucci bag from Italy, I think they're from, money's leaking out of our circular flow and going into Italy's circular flow. Then injections, I tell students to learn this with GICS. So GICS is government spending, investment and exports. Now, since this is a 4-mark question, I'm actually going to write instead of just drawing the diagram. So again, what's it asking us? Explain the effects on the circular flow of income when basically unemployment decreased between 2013 and 2015. Now, you can link it to any component of the circular flow here, but what I've written is one effect from the decrease in unemployment between 2013 and 2015 is an increase in imports. As consumers have high disposable income, this increases their marginal propensity to consume, thus meaning more imports, e.g. Prada handbags from Italy, shrinking the UK's circular flow of income. You could have given any one of the injections, withdrawals, so like savings. Since they have more income, they're more likely to save. If they save more, it shrinks our circular flow of income. And in terms of injections, you can just say pretty much the opposite. When you have a decrease in unemployment, it means that obviously with more people are employed, we're producing more output. More output means more exports, and if we're exporting more, it means it's increasing the size of our circular flow of income. But yeah, very simple question and a very nice 4 marks there. Moving on to question 2. So that is the first 5 marks of section A bagged. So let's move on to question 2. So this looks like it's about marginal propensity to save. Let's go straight to the question. So explain one possible reason for the changes in marginal propensity to save. The value is decreasing, so it's getting more negative. First thing that probably pops into all your minds, and the first thing that popped into our mind, is interest rates, and more specifically lower interest rates. As why does lower interest rates decrease the marginal propensity to save? As it means that there's less return on saving. Therefore, it would mean that there's less incentive to save, meaning that the marginal propensity to save decreases. Lower interest rates lead to a less return on saving, thus decreasing the incentive to save, and that would be enough to bag you those 2 marks. Let's move on to the next question. Explain the likely effect of a fall. So, explain the likely effect of a fall in the marginal propensity to save on the value of the multiplier if all other things remain equal. Of course, the value of multiplier will increase, and that will be one of your marks. But how are you going to pick up the other mark? And the way I'm going to do this, and I think it's a really good method, is just using the multiplier formula. So what is the multiplier formula? So I'm just going to write it. So multiplier equals 1 divided by MPM plus MPS plus MPT. And the main one I'm going to focus on there is the MPS. What is MPS? MPS is the marginal propensity to save. This is as the MPS will decrease, thus meaning the numerator is being divided by a smaller number, is being divided by a smaller denominator, or just like number, thus a larger value, for multiplier. And just to help that make a bit more sense, if you divide 1 divided by 10, you get 0.1. if you do 1 divided by 5, you get 0.5. So the smaller number you divide by, the larger your value is. And what we're saying here, this is one of the formulas for the multiplier. It's 1 divided by MPM plus MPS plus MPT. If MPS decreases, which they've told us that in the question, a fall in the marginal propensity to save, this means the overall value of the multiplier will increase, thus obviously answering the question. Okay, so moving on to the next question. So this is a multiple choice. So which is the correct size of the multiplier? So let's actually read what's given us. So economy has a MPS, so marginal propensity to save of 0.1. It has a marginal propensity to tax of 0.2 and a MPM of 0.1. So basically what we're doing is just using this formula here, which I write out again and answering the question. I'm sorry, that I just meant MPT, not MPTC. And the second formula, of course, is 1 divided by M plus MPS plus MPT. So the marginal propensity to import plus the marginal propensity to save plus the marginal propensity to tax. And that would come out to be 2.5, and that is because all these add together to 0.4, and 1 divided by 0.4 is 2.5, so the answer would be D. And of course, don't circle it, you just tick it. And that is the end of question 2, another easy 5 marks, and let's move on to question 3. So it looks like we've got another graph, and again, it's going straight to the question. So which of the following statement is correct about the UK's inflation record between September 2011 and January 2013? So that is this time period here. So based on the data, the UK experienced deflation, disinflation, fall in average prices, or fall in money supply. So let's have a look at this, quickly look at the first line. This shows UK's inflation measured by CPI. So basically it's asking us what happened in this period here. And if we have a look at it, annual prices, so basically this is just showing inflation rate. Inflation has decreased, and we'd obviously call that disinflation. Why do we call that disinflation, not deflation? Since the inflation rate is still positive, but it's decreasing. If it went into a negative number, so went like to minus 0.1, we would then call it deflation. So the why is it not the last two? It's definitely not falling money supply because we're given no data. There's no inclination for this to be falling money supply. Falling average prices, it's just a bad description of inflation. But yeah, moving on to the next question. So with reference to the data provided, so of course, again, this is 4 marks here, so going to write a decent amount. And it said with reference to data, so you're going to have to include the graph, but explain, so maybe some chains of analysis, explain the process of calculating the rate of inflation in the UK using the CPI, refer to the concept of weights in your answer. So this is pretty much 4 marks, straight content knowledge. You just pretty much need to know how the UK calculate its CPI. For this question, you don't need to write every single step to get all the marks because of course it's hinted at you straight away with the reference to the data provided, then concept of weights. That tells me 1 mark at least for application is using the data, then 1 mark is probably for the mention of weights. So then there's only 2 marks for basically explaining the steps. But I want to give you kind of a model answer here, so I will write out like the step-by-step process of how the UK calculate their CPI. Okay, so number 1, they create a basket of goods, and the basket of goods is the most commonly, sorry if my handwriting's a bit trash, most commonly bought goods and services by UK households. Then what do they do once they have the basket of goods? Then they collect the average prices of these. And this is where I'm going to mention weights. Weighted averages are calculated. And how we're going to explain that. So weighted averages are calculated. So basically they weight goods on the proportion of income consumers spend. And then of course we just compare the total value of basket to base year. But now, since said, I wouldn't write this much in the exam. I'll probably just write 2 of these. And we've mentioned weights, so that's going to be the 3rd mark. Now, the only thing we need to do is to pick up the 4th mark, use the reference to the data provided. And all I'm going to do, I'm just going to go to the chart. Let's just pick January 2012. It looks like it's about 3.5% there. Yeah, so I'm just going to say E.G 2012 inflation rate. So E.G CPI inflation in January 2012 was 3.5%. And that looks quite complex, but really simple 4 marks. And if you get something like that, you should be very happy in the exam. Moving on to the next question. So that is it for question 3. Moving on to question 4. Okay, so this looks like straight away I can see income inequality. So let's have a read of that. So explain one likely reason. This is 4 marks again, a big 4 mark question. So explain one likely reason for the change in UK income inequality since 2007, and the graph does start 2007. Here we have a chart with the UK Gini coefficient of incomes. This looks like a really good question. Now let's analyze this graph slightly. So what does this show? So it shows from 2007 till 2009, the Gini coefficient value stayed at 0.36, and then from 2009 to 2010, it decreased to 0.34 and stayed around there. So it decreased. So the Gini coefficient value, it decreased. And now this, it does rely on your content knowledge. What does it mean if the Gini coefficient value decreases? It means that income inequality is getting smaller. So there's less inequality, and you can say there's more equality. And I always tell my students, link inequality to Gini coefficient to the Lorenz curve. And if we're just thinking about it in terms of revision and just in terms of the Lorenz curve, so the straight line is of course the line of perfect equality, and then the bendy line is the Lorenz curve, which shows basically the degree of inequality. If the Gini coefficient value decreases, what is that going to mean for the steepness of the Lorenz curve? It means the Lorenz curve is now closer towards the perfect equality line. Since the Gini coefficient values decrease, means we're closer to equality, so we have less inequality. And of course, if the Gini coefficient value increased, would mean there's more inequality, thus our Lorenz curve will now look something like this, so just basically further out. But now, of course, with a 4 mark question, you know there's going to be application marks, so 100% quote the data here, quote that is the Gini coefficient value drops, and when it drops, and you can you pick up a few marks of that. But now, let's actually get down to the question. One likely reason for the change in income inequality since 2007. This is a bit of a tricky question, I'm not going to lie, but the first thing that comes to my mind again, why is this 2007-2008 so significant? Especially 2008. What happened in 2008? It was a financial crisis again, wasn't it? And why do you think financial crisis? Because we're saying the Gini coefficient value decreased, so basically income inequality has decreased since the financial crisis. And what's some possible reasons, what's some plausible reasons why income inequality could have decreased? And if you want to put it really simply, a very simple definition I sometimes tell my students about income inequality is the difference between the highest income earners in society and the lowest income earners in society. And let's think about the financial crisis. Who did it affect? It affected the bankers, the investment bankers, the just people in finance, people who make those big bonuses and big wages. A lot of them were laid off. Why would that affect income inequality? As if we think about it now, the highest income earners in society have been laid off. That means that gap between the highest income earners in society and the lowest income earners in society has now reduced, thus meaning the Gini coefficient value and subsequently the income inequality, the level of income inequality has dropped. Okay, so the way I would word this for 4 marks is due to the financial crisis in 2008, highest income, I'm not going to write the rest of that, but basically the gap between the highest income and the lowest income earners in society became smaller since the highest income earners in society lost their jobs, and the lowest income in society, for example, since the highest income earners in society lost their jobs, they had to pay out more benefits as well around the time of the financial crisis, thus meaning that that gap, that income inequality decreased. And yeah, and it is a bit of a tricky question. It's a bit more of an inference question, just having to kind of use your brain. And it's not a guessing game. It's using the content. And for questions like this, use the content knowledge you have. So here, it doesn't tell you any like specific reason, but try to think back. Like even these dates, to be fair, the only real date you need to remember is 2008. Anything around 2008 is to do with the financial crisis. But whatever they give you, work with what they give you, and just always know in your mind, they're only testing you what is on the specification. They're not asking you to think of some random policy, think of something you don't know. It's all information you do know, but you just need to sometimes retrieve that from your brain. I'm moving on to the second part of this question. Which of the following values for the Gini coefficient is correct if there is perfect income equality? Now this is again just content knowledge. Let's try to rule some out. So it's definitely not D, because D just looks a bit mental. So B, it's not going to be B either. Now a lot of students probably, it's a guess game between 0 and 1. 1 actually represents perfect income inequality, whereas 0 would be the answer. That means 0 represents perfect income equality. And that is a wrap for question 4. Let's move on to question 5. Okay. Another table. They love a good table. So I think every question's been a graph or a table. But which of the following statements can be deduced from the data in the table? Okay, so let's now have a read on what the table is actually telling us. So we have GNI per capita at 2011 PVP, sorry, and then we have HDI. Okay, so we have GNI, we have HDI of Vietnam and India. Okay, so what does basically what does the GNI and HDI of Vietnam and India tell us? Okay, so let's have a shot answering this. So we have, so just looking at it, so India has a higher GNI, and Vietnam has a higher HDI. So now let's answer this question. So average incomes are higher in India than Vietnam. India has a higher GNI, so I would say that follows. So that's probably the answer. But let's have a read of the other ones and why it's not the other ones. The levels of absolute poverty are higher in Vietnam. Vietnam has a higher HDI value, so levels of absolute poverty are higher in Vietnam. But HDI, it does not tell us actually about poverty itself, so I'm going to say that's no, because HDI is a range of indicators, so we can't deduce that from the data we've given. Life expectancy is higher in India than Vietnam. Again, we cannot deduce that from the information we've given, because, like I said, HDI, although it does take into account life expectancy, we don't have specific stats on life expectancy. And then lastly, provision of healthcare and education is less effective in Vietnam than India. I'm going to say that's actually untrue, because if you look at the HDI value of Vietnam is higher than it is in India, meaning that the provision of healthcare and education, although, like I said, we don't have the specific stats, but it probably is likely to be higher in Vietnam on average than in India. But I'm going to say that's wrong. So yeah, the answer would be A. Okay, so moving on to 5B, which again, another 4-marker. We love these. So with the reference to data provided, so that means, of course, since that there's going to be a few application marks, maybe 1, maybe 2, maybe even 3, but who knows. So explain 2 limitations. So it's a limitation question, so this sounds like a very content knowledge question, of using HDI to compare the levels of development between countries over time. This looks like a very nice, very decent question. So let's answer this. The first limitation is that HDI uses averages, so it doesn't show the distribution of, for example, income within a population. It just shows the average income. So there might be a really poor part of, is it Tanzania? Vietnam. There might be a really poor part of Vietnam, and there might be a really affluent, rich area, but it'll just take the average. So it'll say that Vietnam is like maybe in middle in terms of income, but in reality, there's a really poor part and a really affluent part. The way we would obviously get solve that is using IHDI, but I'm not going to mention that since that's not what the question is asking. And what would my second limitation be? So it's going to be HDI only looks at health, income, and education, and it basically ignores factors such as environmental sustainability, which of course is extremely important. Just make sure, like I've done here, have one that was my reference to the data, by the way. I just included one stat, so I included India's HDI value. That would give me the mark for application. 2 reasons will give me the 2 knowledge marks, and then just at the end here, basically, I did a bit of analysis, as there will be 1 analysis mark here. But yeah, I explained it more verbally than writing it down, but you get what I mean, and that is enough to bag you the 4 marks there, and that is the end of that section here.